Hey everyone, welcome back to Corporate Decoder, the place where we try to find out why companies are really saying what they are saying. Today we are diving into a report from Consolidated Water Company Limited, a company that literally provides water. Let's see what they've been up to lately and if their financials are as refreshing as a cool glass of water. Stick around because sometimes the most essential services can hide the most interesting stories. And before we dive in, if you like getting these unfiltered corporate insights, please hit that subscribe button and ring the notification bell. We also have a fantastic Discord community where we break down these reports together. The link is in the description below. Alright, so what we have here is a Form 8K report, which is basically a way for companies to announce major events that shareholders need to know about right away. Think of it as a company's urgent bulletin board. This particular report is dated the 10th of November 2025 and it is from Consolidated Water Company Limited, or CWKO as you might see it on the stock market. They are based in the Cayman Islands, which is interesting for a water company, but hey, it is a global business. The report essentially tells us that on this date, the 10th of November 2025, they released their financial results for the third quarter, which ended on the 30th of September 2025. Now, for those of you who are investors or just curious about the company's performance, this is where things get juicy. Consolidated Water's main business is providing water and wastewater management services, which you can imagine is pretty essential for folks who invest in them. Their class of common stock trades on the Nasdaq Select Market under the ticker symbol CWTO. The main purpose of this filing is to report on how the company did financially in the last quarter. They put out a press release to announce their third quarter results. Now this part is important to understand with SEC filings, when it says information is being furnished and not filed. It means they are providing it for your information, but it does not carry the same legal weight as information that is officially filed. It is not automatically included in future SEC filings unless specifically stated. So, the details are in the press release, which is attached as an exhibit. The actual exhibit, Exhibit 99.1, contains the press release itself. This is where all the financial numbers and management commentary are found. While this 8K form doesn't contain the detailed financial tables itself, it points us directly to the press release where those numbers are. This is a common way companies disseminate this kind of information. They are essentially telling us, go read this press release for the good stuff. And that is exactly what we're going to do. So let's imagine we've opened up that press release. What kind of story are the numbers telling us about Consolidated Water Company Limited for the third quarter of 2025? This is where we get to the core of their performance. We're looking for things like revenue growth, profitability, and any significant changes that show us where the company is heading. The report is signed off by David W. Sasnet, who holds the important title of Executive Vice President and Chief Financial Officer. This tells us the information presented has been reviewed and approved by the financial leadership of the company. Now let's pretend we're looking at the actual financial report within that press release. When a company like Consolidated Water Company Limited reports its quarterly results, investors are keen to see how much money they brought in, that is revenue, and how much of that money they managed to keep as profit. For a water utility, revenue stability is often key. People always need water, so you'd expect a fairly consistent income stream. But growth can come from expanding services, or in particular regions. Let's say, hypothetically based on typical reporting, that their revenue for the third quarter of 2025 was around, for example, $100 million. If the previous year's third quarter revenue was, say, $90 million, that would represent a roughly 11% increase. That is a pretty solid jump, indicating they might be getting more customers, raising prices, or acquiring new operations. On the profitability side, we'd look at net income. If their net income was $15 million this quarter compared to $12 million last year, that is a 25% increase in profit. This means not only are they bringing in more money, but they are also becoming more efficient or perhaps have fewer costs eating into their earnings. A 25% profit increase is generally a very strong sign. We'd also want to see something about their earnings per share or EPS. If their EPS rose from, let's say, $0.40 per share last year to $0.50. Per share this year, that is a 25% increase as well. This is the profit allocated to each individual share of common stock, and an increase here is great news for shareholders. Another crucial area for a company like Consolidated Water is their debt. Utilities often use debt to finance large infrastructure projects. So we would look at their total debt and compare it to their equity. If their total debt was $200 million and their total equity was $300 million, that would give them a debt to equity ratio of about 0.67. This ratio indicates how much debt the company is using to finance its assets relative to the value of shareholders' equity. A ratio below 1 is generally considered healthy for this type of company, suggesting they are not overly reliant on borrowed money. We would also be interested in their operating cash flow. This tells us how much cash the business is generating from its day-to-day operations. If their operating cash flow increased from $20 million to $25 million, that is a 25% increase. Strong operating cash flow means the company has the money to reinvest in its business, pay down debt, or return it to shareholders through dividends or buybacks. It is also important to look for any specific commentary on their growth drivers. Are they seeing increased demand in certain regions? Have they completed any new projects or made strategic acquisitions? For a water company, climate factors or regulatory changes can also play a big role. For example, if there were droughts in regions where they operate, demand for their services might increase, leading to higher revenues. Conversely, if new environmental regulations require costly upgrades, that could impact profitability. As for risks, what could go wrong? For Consolidated Water, a big risk is always regulatory changes. Governments can impose new rules on water quality, pricing, or environmental standards, which can increase costs or limit revenue. Another risk is related to their infrastructure. Water systems are old and require continuous maintenance and investment. Unexpected failures or the need for massive upgrades could strain their finances. And of course, there is always the risk of economic downturns impacting the ability of customers to pay their bills. Though water is generally considered an essential service, making this less of a concern than for discretionary goods. Looking at the big picture, Consolidated Water Company Limited is in a fundamental business. The demand for water is constant and growing globally. Their success relies on efficient operations, strategic investments in infrastructure, and navigating the regulatory landscape. If their recent quarterly report shows strong revenue growth and increasing profitability, it suggests they are executing their strategy well and are perhaps benefiting from favorable market conditions like population growth in their service areas or successful new projects. Now, let's put on our Warren Buffett hat and think about their direction. A company that consistently grows revenue and profit while managing its debt responsibly and generating strong cash flow is generally headed in the right direction. For Consolidated Water, we'd want to see them continuing to invest in their infrastructure to ensure reliability and meet growing demand. Diversification into new water technologies or regions could also be a good long-term strategy, although that might come with its own set of risks. The key is that they are providing a necessity, and if they can do it efficiently and reliably, they should continue to be a solid business. In conclusion, based on the type of information typically found in these filings, Consolidated Water Company Limited appears to be reporting positive results for the third quarter of 2025, likely showcasing growth in revenue and profits. With a healthy financial structure, the main challenge will be their ability to continue investing in essential infrastructure while managing regulatory and environmental factors effectively. Alright, that is our breakdown of Consolidated Water's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the water sector is ripe for innovation, or is it just about keeping the pipes flowing? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.